Hey, good afternoon. This is Mayor Valensky with Driving Markets. Okay, so what I'm going to do is I'm going to change around slightly the broadcasts. Okay, so we're going to have a 3 to 4 minute market report in the morning, and then during the day we're going to do 50-second to 1 minute updates, and those are really relevant to what's happening in that particular day or what's going to happen the following day or two. Okay, however, I'm also going to incorporate, like on this video, some general education. It's important that the trader has general education. Most people who are subscribed to this channel or are going to subscribe to this channel are looking at trading, but also looking at where can they get ideas from regarding their particular trading account. Whether you're trading in the UK, Australia, New Zealand, America, Japan, Far East, it's more or less the same. Trading is it going up or is it going down? Okay, and what's your particular position vis-a-vis the market? Are you long or are you short? So I'm just going to give some general educational points on driving markets, and we'll cover quite a few topics. Today we're going to cover the US dollar. All right, why is the US dollar significant? What is it so sought after, and how does it impact on all of the pairs and the economics of the country? So let's just talk a little bit about the US dollar. Obviously the US dollar and the value of it is based on the value of the US economy. Now you have to understand that as far as the US economy is concerned, it is the #1 economy in the world and will remain so, I wouldn't say forever, but for the long term. China is trying to impose and get there to be #1, but it's not going to be #1 purely because of the setup of China. Russia would also like to disrupt the power of the dollar, but it's not there. So the dollar is going to remain the #1 leading currency, with the American economy being the leading one economy as far as global economies are concerned and global markets are concerned. Now, the dollar value is based on the assets within the US, and the assets in the US are huge. They have coal and steel, they have precious metals, they have copper, they have oil, they have forestry. It's endless, the natural resources that are within the states, and the dollar is based essentially on that particular value of the economic raw materials. Okay, so even if America goes into debt and just keeps on issuing more and more treasury notes and more debt, the value of the underlying assets, which is the land and the resources in the states, far outweighs any particular debt. Now the dollar is also a currency that is used internationally. It's called the greenback, but also it can be used as a hedge and a safe haven. So example, in times of crisis, when the world is all upside down, whether it's the 2008 economic crash or the pandemic or the .com crash or any types of crisis, war, then the dollar will surge in value because it's seen as a safe haven. And because it's seen as a safe haven, and then it's sought after by investors, traders, and bankers and institutions to hold onto the dollar. In other words, it's a flight to safety currency. Okay, so that's one of the main characteristics of the dollar. The second characteristic, which is more probably pertinent to this day at the moment, is where is the value of the dollar in relation to interest rates. So as interest rates within the US would go up or go down, then what happens is you're going to have the dollar fluctuating according to the interest rate environment. So at the moment, interest rates in the States are running at say 4.5 to 4.75%. That makes the return on the dollar, if you're holding dollar denominated assets or dollar denominated bank accounts, the return on your money will be anywhere between 4.5 to 4.75 maximum gross return. So it makes it attractive vis-a-vis versus other currencies. Now, the dollar is obviously weighed in as a major currency. It's the #1 leading currency. And dollar has an impact on commodity prices, on oil prices, and fluctuates on economic factors, whether they're soft grains or whether they're raw materials, everything's based in the dollar. Now, not only is it valued in the dollar, if you think about it, when a commodity is traded in dollars, yet it's bought by the Russians or the Europeans or the Japanese, then it has to be paid for in dollars and then converted into their local currency. So the demand for the dollar is always going to be there. So the dollar is, in fact, is the number one strategic currency as far as economies are concerned. Now, the dollar in times of low interest rates or in the times of economic well-being will float lower over time. In the times of economic hardship or economic slowdown or crisis, then you see or rising interest rates, you'll see the dollar rising. So the dollar is always an essential part of your trading. Whether you're a Forex trader or whether you're a share trader or whether you're a bond trader or whether you're even cryptocurrency trader, everything will be based in US dollars. So it's very important that you understand the mechanics of how the dollar works. Remember, over the last 10, 12 years, there's been a lot of quantitative easing. Quantitative easing is another word for printing money. So a huge amount of liquidity, which is flowing of money out into the economy, has been controlled and has been frequented by the US Central Bank, the Federal Reserve, and they've just printed a load of money to ease the liquidity crisis that was created back in 2008. So that essentially puts huge amounts of dollars into the economy. When there's huge amounts of dollars in the economy, normally you would get inflation. However, in this particular case, we didn't have inflation. Why? Simply because there was a huge demand for the currency. There was a shortage of it due to the 2008 banking crisis, and therefore didn't really impact inflation for 10 to 12 years. Now, the US dollar, being central on foreign exchange markets, is obviously used in pairs, whether it's the euro dollar you can pair it up with, or pound dollar, which is called cable, or dollar yen, or US dollar Swiss franc. It's always there as a pair and as a measure when it comes to foreign exchange trading. So those who are foreign exchange traders will always look to see where is the dollar at, and the dollar fluctuates on a regular basis, okay? Big impacts on dollar are obviously FOMC, Federal Open Market Committee meetings, and things like interest rates or inflation or crisis or war, like there was in Ukraine, Russia, where the dollar shot up due to a crisis in Ukraine, Russia, okay? So you've got to look at the dollar and see what are the fundamentals when it comes to dollar trading. Wherever your asset class is, wherever your trading is, you must always keep an eye on the US dollar and have it there in the front of your trading screen as a measure as to where markets could go as a result of fluctuations within the US dollar. Hope you enjoyed this session. This is one of many educational ones. Mayor Walensky with Driving Markets. Have a good day.